Oh, with David Jones now. He's the Chief Strategist at IG Index. David, thanks for joining us once
Pleasure.
again. Markets all over the place. What do you make of the fundamentals, first of all?
I think it's quite a difficult one. I think we've seen quite a shift in investor sentiment over the last couple of months, driven by what we've seen going on fundamentally. First of all, of course, there's the concerns about what's happening in the Eurozone. This is a big worry. This has massively unsettled investors. And there's the bigger worry that stock markets have just got ahead of the wider economic recovery. And I think that's why we're seeing this volatility in share indices around the world at the moment.
And we picked the real benchmark, the S&P 500, which over 15 months we've come back a long way.
I think looking at the S&P now, it's back to some big levels from earlier in 2010 and the end of 2009. When we were down around about 1,030, 1,040 on the S&P last time, there was real bargain hunters jumping in, driving the price back up. But we can see from the chart, we're sort of languishing around these levels, which I think is a good description of how sentiment is at the moment. People just aren't sure. So I think it's a very key time for the market down here.
What about the old adage, sell in May and go away?
That definitely seems to be bearing out at the moment. And maybe halfway through the summer, many people will be regretting they didn't do exactly that.
Okay, let's talk about one stock then, BP, which is just more extreme than any of the other indices and the other benchmarks. I mean, we're back at levels we haven't seen since last year.
It's been a torrid time for BP, sort of April, May, of course, as the oil leak news has broken, and there's been attempt after attempt to try and stem the flow, and it hasn't really happened. We've seen the share price just absolutely clobbered. We had the biggest losing day ever for BP in 18 years. It was down 13%. Down at these levels again, it does look interesting. You know, as you say, we haven't been down here for a year and a half, but last time round, the market saw real value, and this is when we were in the grips of the financial crisis, so things were really dire, but we saw buyers step back in. So I think, again, it's a key time for BP just down in the sort of 400, 420 area.
People always talk about yield with BP, very attractive, but there is a risk possibly that the yield won't be there anymore.
That's a big problem at the moment, as you say. I think it's traditionally very attractive down here with interest rates so low and a cracking dividend based on where the price is. But of course, one of the concerns is amongst investors, are they still going to carry on paying the dividend? I think if we have a bit more clarity on that, could well be one of the things that kickstarts a recovery. But again, it's a difficult one to call at the moment.
Okay, let's turn to the currency markets. Euro-dollar clearly very much in focus, more concerns about the Eurozone than anything else. But where do we go from here?
I think lots of people, when it comes to euro-dollar, are almost taking it for granted that we'll see parity, we'll see one-to-one. And I think, again, maybe at the moment, that's a little bit too much of a negative view. It does suggest another 15% fall from the euro from here. Considering it's fallen 20% in the last 9 months, it's not out of the question. But I think, again, we need to be careful about not being too pessimistic on the euro. There's a big level to watch, again, for me. It's the lows from 2005, around about 116. I think let's wait and see what happens if and when the euro gets to these levels, and maybe we'll see finally the first signs of sentiment turning.
And the key so far has been weakness in the Eurozone, but that doesn't necessarily assure us that the American economy is firing on all cylinders either. So could it be redressed some way because of concerns about the US economy?
I think it would, but it's probably more for the euro. Again, is a bit more clarity as to what's happening regarding the debt in the various nations within the Eurozone. And I think that, again, unfortunately, this is going to be something that probably takes a few months to become clearer. So again, I think in the short term, we're probably not going to see the euro turn around, but maybe when the summer's out of the way, we know a bit more about the debt, maybe we'll have a different picture for the euro.
Okay, one thing that we're slightly more certain about, finally, to talk about it, is gold, and the chart does seem to be pretty much a straight line. Is there anything we should be worried about?
I think at the moment, not really. To end on a positive note, you know, as you say, gold, very clear trend, right back to the early 2000s, and the latest leg of the trend we're in, running from sort of November 2008. It does see the moment on gold, any weakness seems to bring the buyers back out. The economic fundamentals are playing into the story for buying gold, the unsettled unease in the Eurozone, then of course various tensions around the world like North and South Korea. So at the moment, based on the charts, based on the economic backdrop, it does seem to be that we're going to see gold push higher, and any weakness is a buying opportunity.
I was going to say, but at the same time, is there any opportunity to just take the profits and think it can't go any higher?
Well, definitely, an open profit isn't really a profit until you've sold out. So again, if you were sitting on fantastic gains in gold, I would always be ready to hit the sell button if the market starts to reverse.
Okay, we'll leave it there. We'll get you back to talk about those prices once again. David Jones from IG Index. Thanks very much indeed.